In this video, we're going to be reviewing the new instant funding prop firm launched by Bernd Skorupinski. Specifically, this is his campus fund, his new prop firm launched for the students of his online trading campus. And we're going to go through some of the nuances of this prop firm, some of the costs, and some information which has not been made public yet. This video is sponsored by Prosperity Algo and our free Golden Time Bomb Expert Advisor. Do you want to make 100+% annual returns through automating the London breakout and the opening range breakout? Then click the link in the description. So, as a full disclaimer, I personally am not a student of the online trading campus, so couldn't apply for this. However, at Prosperity Algo Solutions, we have quite a few clients who are active traders, and some of them are actually students of this program too. And they've been kind of giving me some interesting information and teaching me a bit about what is happening behind the scenes. And therefore, I wanted to make this video just to share with the community as to how the process of applying for this prop firm would look like, as well as what some of the trading conditions and costs would be like. So this was a really interesting prop firm because it was launched by Bernd, who is one of the arguably the most sophisticated influencer in the trading space. Because not only does he have a large presence and a large audience and a large following, but he's also a very successful trader, having been on top of the FTMO leaderboards, as well as I believe he just won the Robbins Cup for 2025. So clearly a very knowledgeable man. And he's been alluding to launching a prop firm for some time, but the big challenge was, how do you essentially launch a prop firm without having a massive conflict of interest if you also are providing education services? Because as we all know, the classic prop firm model is essentially an online casino where you pay out successful traders from the failed challenge fees of unsuccessful traders. But if you are also an education provider and you're hoping to teach people to become students, obviously you don't want the majority of your students to be failing. So that's kind of the conflict here. And Bernd has spoken about this in many times on different podcasts. So I believe the big kind of unique feature about this prop firm is they are leveraging your data to essentially be able to make money off the trades of the different traders while being able to essentially eliminate their conflict of interest. So effectively what they're saying is that if you're a good trader, they will essentially use their machine learning models and their AI to be able to find some ways to monetize your trading data. And the thing about this is that almost every single prop firm has said this at one point in the past. Like before the whole CFTC crackdown on my Forex funds, most prop firms said that they copied your trades to live accounts and that's how you were being paid. So here, like because they actually do have a large community and they do have a very good reason for doing this, I would be more inclined to believe that these guys are actually doing it properly, but I'd be really curious as to how they're actually making it work. Because the simple fact is, having to find a way to monetize a ton of different traders, many of whom are not very good, can be very challenging. Like even being able to copy the signals across different platforms, being able to use proper risk management on thousands and thousands of people who you don't know, and being able to essentially monetize that liquidity can be rather challenging. So how they're actually doing this, I'd be really interested to figure out. But as you can kind of see here on the website, they're claiming to have this entity called Cypher, and supposedly they're using very advanced machine learning to essentially leverage your data and leverage your trading data to make money. I imagine that's partially perhaps copying it, or maybe it's selling the data to other providers and other like institutional investors, as well as looking for high quality traders through the anomaly detection. Honestly, I have thought for some time, and people have said that if the industry wants to be sustainable, they do need to be able to find a way to make money off winning traders too, not only losing traders, or else eventually they're just going to not be able to make payouts, and there's always going to be this massive conflict of interest. However, technically so far it's been incredibly difficult. So really curious to see, as this firm kind of progresses, how they will find a way to do this, and if this will actually work. But it seems like they've also tried, and it's quite a unique proposition. Now let's talk about what you guys probably really care about, the exact trading conditions and as well as some of the behind the scenes information. In terms of cost, so I'll speak slowly here so you guys can really register this, But from what I've heard from one of our clients, for a $90,000 account, they're currently asking for $3,000. This is an instant funding account. For a $180,000 account, they're asking for $6,000. And for a $360,000 account, they're asking for $12,000. So they are asking for a very, very significant amount of money for these accounts. But it would be in the same ballpark as some other instant funding groups like iFunds. The leverage that you get is 1 to 10, and this is publicly available information. And their payout splits are 75% for the $90,000 accounts, 85% for the $180,000 accounts, and 85% for the $360,000 accounts. So it's quite an interesting approach. And from what I see that they're doing here is they haven't said what their max total loss would be, but I venture that it's probably not super far away from how much you're putting down. So they're essentially able to manage their risk because your total max loss will be at least partially covered by your actual deposit. And the reason why instant funding works so well as a business model is because in many ways it's very similar to a broker. Like here, you are essentially buying an account where they are 30x leveraging your capital because you're putting in $3,000, they're 30x leveraging it, and you're getting a $90,000 account. And then on top of that, they're giving you 1 to 10 leverage. If you do the math, you're essentially putting in money and they're giving you 1 to 300 leverage in terms of buying power. So this is less than what many brokers would give you. However, obviously here, you're not using pure like debt leverage. You actually are increasing your buying power, or not your buying power, like your deposit significantly. So you're able to withstand significantly greater dips in your equity curve. Like for instance here, because you're 30xing your deposit, if you were to, you can use significantly less leverage in terms of like traditional account-based leverage so that you're able to effectively risk more per trade. And we can go really into the weeds on that, but that's really the major advantage here. So that's really the main takeaways in terms of trading conditions. You have up to a 90% profit share. I just broke down those shares and those splits in detail. I broke down the costs. It seems like there's no profit targets, no daily max loss, and you have a lot of flexibility in terms of the types of trading which one would like to be able to do. Something really key to note, especially as an EA development company, they do not use MetaTrader. They're using direct trades on TradingView. Therefore, if you are an expert advisor trader, you likely would have to look into more of a trade copier or some sort of API-based trading. And my clients are currently asking their sales team if this is actually possible, because all of a sudden that can severely limit the type of trading which one can do. So that's another thing to really keep in mind. In terms of the assets, the really interesting thing is that you're able to not only trade Forex, commodities, and indices, but you can also perhaps trade stocks, which is quite a unique feature there. They're trying to really increase the amount of potentially tradable assets. So that is also very, very neat. And here we can go through another page, which is the current trading conditions. We can see that they have very reasonable commissions, leverage, margins, and significant amounts of tradable assets. So really my takeaway from the fund and the campus fund and the pros and cons, the pros is that right now they seem to maybe be one of the first prop firms to actually find a way to monetize the data of their traders in a transparent way. The reason why is they almost have to do this because they can't have an enormous conflict of interest with their students, right? Because if they're feeding their students into this, who've paid them thousands of dollars, and with the intent of their students losing, like obviously they're going to not be able to run a sustainable business because those students will all be very unhappy with them. So they actually have a true incentive to make this work. The fact that they're doing this with an instant funding approach with more expensive accounts is also a way that I think it could be a more viable business because them as a prop firm are bringing in sufficient cash flow to be able to hedge their risk, especially if they make your max total loss comparable to what you paid for the account. Some of the things to keep in mind, really interesting that you can trade lots of different assets. The biggest con, they're not using MetaTrader, so you might have to get creative with your trading styles, particularly if you're more of an EA user. But I think this does have the potential to be a pretty big game changer in the market. Hope that pricing information was interesting, and let's keep following this and see how the firm develops. Take care, guys. Leave me a comment.